Hey, Ashley, how's it going? Happy
Good. How are you?
Thursday.
Happy Thursday. How are you?
It is a good day to have a good day. And so I'm excited to get a chance to connect with you and
Yeah.
glad this worked out for us. So, congratulations on getting pre approved. Kind of what I was envisioning for our time, Ashley, was that we could walk through some numbers on the scenarios on the properties you had inquired about, walk through some next steps in the process, answer any questions you have, and then also talk through maybe some strategies to kind of help increase the chances to get the offers accepted. So some of the things that we're able to do from an incentive or option perspective as a lender. So those are like the three or four things that were kind of on my radar to cover. Does that sound good to you, or do you have maybe some initial questions you want to start with?
No. I mean, honestly, my biggest thing is just looking at what's going to put me in the best position. Given what I have to put down. I have a kind of a monthly payment
That
that
you're trying to stay
I.
to.
Yeah, exactly. Yep.
Okay, so I think that's part of the reason why I want to do the meeting over like Teams or virtual. It's like I'll put up the numbers. Let's run the scenarios. If we can get the payment where you want it, fantastic. But interest rates are at about a 20-year high, so there might be some other strategies we could take to try to maybe get you closer to the payment you want, either now, or we do also have some options where we do no cost refinances in the future. So, rates are expected to go down in the next, year or two. So maybe we could
Right.
talk through what that looks like. So that's kind of why I want to do
Sure.
the meeting. So, um, but what I was going to say is, um, my understanding of your timeline is that you are selling your home. That home is under contract and is set to close on February 8th. Is that right?
That is correct. We're in the option period right now, so
Got it.
we
So
could
you're
obviously.
executed as a contract, but it hasn't cleared all the contingency period. So it is
Correct.
possible that the
So
deal could fall out, but we're
correct.
hopeful that it goes through, right?
Yeah, we could change our. I mean, it's really for us. I mean, if they come back with a lower number than what we're willing to accept, then we can back out.
Okay. So I prepared
Yeah.
an option where we're going to align everything to close when your house sells after February 8th, which is called a contingent offer. I also
Mhm.
did see a way where we could go non-contingent. So if you needed to, for some reason, which I know your situation sounds like probably not ideal, but if you needed to close before February 8th, I saw a path to get you there. So what I was going to do is talk through the timeline. So what I would
Sure.
say is in the current market, typically, if you made an offer, so like on these two properties that you identified, if you were to make an offer on them today, I would say generally speaking, 30 days is the typical timeline. So talk with Trent, but if you made an offer today, it's possible the seller may say, hey, we want you to close on January 28th. In that situation, we're going to need to go with a non-contingent strategy. However, we could also just say we want a longer closing timeline, even though typically it's 30 days. The market right now, in my opinion, is a little bit softer because of the winter months. Sellers are a little bit more willing to work with buyers, especially if there's no other offers on the table. So we could just write the offer today on these two properties or one or both, whatever, and we just write into the contract that February 8th is our close date, right? And so that would be my thought, is that my recommendation is on these two properties. Based on what you've told me so far, I think we write the offer with a February 8th close date. We just need to run that past Trent and make sure he has no objection to that. If we close on February 8th, your first mortgage payment will not be till April 1st. So you will kind of get the whole month of March off. Does that make sense?
Yeah. The one thing with that February 8th date, I did, and I told the potential buyers of this house that I am already scheduled to be. I know I'll be traveling because it's a one of my best friends. It's her 40th birthday,
Oh,
and
cool.
so that Thursday was a travel day, and they said that I can close remotely and do all the things that we need to do. So um, I don't know if that would be a problem on the end
It
of
depends.
this,
Where
or if
where are
it's
you traveling?
so it'll be Los Angeles.
So what I would say is here are your options anytime you're not in town. Ideally, you're in town, you sign all the paperwork both on the sale and on the buy. On the sale side, you can sign early typically because the seller document package, there's no lender involved, so it's a little bit more straightforward. You can just work with the title company on that when you sell your property. So if you want to close on the 8th, you could just sign on the 6th. So it's the sale of your property. Now, buying, that's where I'm involved, right? So as a buyer, we want you in person. That's option
Right.
number one. Option number two is you sign early on February 7th in town, and then we over or remotely. and we overnight the documents. That way the originals arrive by the 8th. So if you're traveling on the 7th, we maybe have you sign at the hotel when you arrive on the 7th. Okay. Or we have you sign on the 6th. Okay. You have to sign early and overnight the documents. Another option would be what's called a remote online notary, meaning you're going to do something like this. You log in and you sign the documents. So there are some options. It's just more hoops to jump through when you do that kind of stuff. So if you're going to be out of town on the 8th, we just might have to work around that. So write the offer for the 8th for now, I guess, or you could do the 9th. But if you're going to be traveling for a whole week, we might as well just write it for the 8th and then just plan to do a remote online notary, or we do
Yeah.
an in-person remote notary. Does that make sense?
Okay. Yeah, I mean, I think knowing kind of I'm doing given everything that's happening, I'm really being a lot more specific. I'm trying to plan my work because I travel a lot for work. Like I have
Okay.
to be, and so I know that that week of like leading up to the 8th, that whole week was going to be a week of travel for me, and so I was going to be, and I gotta say I don't know because I have a territory that I cover, and so I don't know from where I will be. I will probably not be in Dallas for that entire week, and so that's why I was thinking
So
like the
then what we
following
need to
week I'll
do
be
then
back in
is we just have
Dallas.
to plan for, you're gonna have to meet a notary somewhere at the hotel, at a bank, at a Starbucks. I would say that's typically easier. Um, some people are comfortable with the remote online notary. It's a little bit, there's sometimes some technical things you have to work through. So we just have to work with the title company. So I'm just going to make a note right now. You're going to be out of town. We're going to have to plan accordingly.
Yep.
We could do a power of attorney and have someone sign on your behalf. I don't always recommend that, but that would be my plan C. I think plan A, you sign remotely in person with someone wherever you want in Los Angeles or wherever you're going to be. Plan B is remote online notary. Plan C is we do a power of attorney. Plan D is we push closing back till
Yep.
you get back in
Okay.
town. So,
Yeah, and I'll be
but
back the
obviously, well,
12th.
let's get the offer accepted, and then when we
Yeah.
meet and we get the property identified, we can then talk with that seller and with that title company
Yep.
and finalize that. Does that sound good?
Sure.
Okay. So then the next thing I had on my agenda was the numbers, right? So the numbers I prepared for you on both these properties was assuming you make an offer at $1 million. And I would say the option we discussed was a $450,000 down payment. Okay, so 450. That's
Yeah.
going to come from the sale of your home. We're going to do a 30-year fixed rate conventional loan. That's what I set up the numbers as. However, if you needed to close earlier, which it doesn't sound like this is really planned, we could always do a VA loan. So I would say I did prepare a VA loan because of your veteran benefit. You do qualify for that, and it would be an advantage to you to do that. You could put less money down. I could actually do the loan amount. I was going to do basically a 5% down VA loan. And that way you could at least close early if you wanted to. Now, that payment's going to be higher. So if you're more payment sensitive, then I would say we probably don't want to look at that option unless, something happens where you have to close sooner. But let's start with 30-year fix is my recommendation on the conventional loan. I think that's probably going to be the better route because of how much money you're putting down. Typically, the advantage for VA loans is that you're able to put less money down, get a better interest rate, but there's also the trade-off of upfront mortgage insurance. And so, at least my understanding is that you do not have any disability rating. Is that correct?
Right. I do not.
So because you do not have any disability rating, I would recommend conventional. If you had
And what
any kind of
exactly?
disability rating, I would recommend we do a VA loan because the rate's typically cheaper. Okay.
Gotcha.
But
Okay.
you have an upfront mortgage fee, which on a VA loan, that's going to be typically, 1.5% of the upfront fee, depending on how much money you put down. And that's going to be an extra fee you would incur on VA that you wouldn't on conventional. So in I'm going to, again, probably more encourage you to go to conventional, but I
Okay.
wanted to at least speak to that since you did ask about it.
No, no, I will totally go with what you recommend. And I can tell you, the I looked at the property on Heather Knoll is the one that is looking like I'm really pursuing.
We're
The
leaning
other
towards that
one,
one.
yeah, the other one is not going
Okay.
to work. I'm actually going by at 2:30 back over to Heather Knoll because I'm getting a quote for a pool because that's part of um something that I would have done in the process of I would start that process of having them put a
Okay.
pool in.
We can
So
help out with pool financing after the fact. I typically recommend doing that after the fact, right? Because I don't think,
yep.
looking at the pictures, Heather Knoll does not have a pool currently, right?
No. Nope.
Okay. Yeah. So if you want to pay for that in cash, you could do that. Like we
Yep.
could put less
Yep.
money down and then you could just pay for the pool in cash. You might be able to get better deals with the general contractors if you do it that way. So like instead of, for example, putting $450,000 down, maybe put 300 to 350 and a budget 100 to 150 for the pool.
Well,
But if you
so
said, hey,
the 450, so the budget I have is 450 to put down, and I also still have additional for the pool.
You have it, okay, so
Yep.
okay, cool. And then,
Yep.
perfect. Okay, so then it sounds like you're already thinking that through. So then before we jump into the numbers, interest rates are a hot button issue right now. So if you're somewhat familiar with what's going on, basically all this chart's showing you is rates have gone up a lot in the last 2 years. However, don't be too worried or anxious about that because the current expectation is that we've hit the ceiling on rates and we're headed back down. So the current mortgage forecast is rates are going to be about 6% by the end of 2024 and 5% in 2025. So what we're offering to all of our clients that work with us is a lock and drop incentive, meaning that you get a no cost refinance anytime for the life of the loan. So anytime it makes sense, we're going to refinance you one time for free at no cost. So what I would say is when I look at where, rates are trading at right now, if we look here, like on Wall Street Journal, I would say Wall Street Journal has rates at 7% as of today. We've seen a good improvement, and then bankrate.com also has it at 7% today. And then there's some online lenders like Rocket Mortgage. I think they were probably at 6.875 today on a purchase. Yeah, so 6.875. So I would say that's generally where I'm seeing a lot of my competition at. Okay. I believe I'm able to offer you a better rate. I do offer an honest and competitive rate match guarantee. I believe I can beat most lenders out there. If I can't, if you find someone who can do a better job than me with a better rate, send it over to me. If I can't beat it, I'll be kind and professional and wish you well. But most of the time, I'm going to get you the best deal possible, in my opinion. That's my commitment to Trent. Okay. So I would quote your rate at 6.49. Now, with that, that does put your payment on the Heather Knoll property at 47.48. The property taxes on this property are a little bit higher. I can go into that in more detail if you would like. Also, homeowners insurance is at 225, but I will let you know when you add a pool, this probably could jump up to 325. It typically raises the insurance on the property when you add a pool. So you may need a budget for a payment around 4,700, maybe 4,800, all in. How does that payment compare to your expectations?
Yeah, so that's very that's right in line with where that's
Okay,
under kind of where I'm trying to be, so that would be ideal.
fantastic. All right, that's what I was hoping for too, because there are some strategies. It does look to me you're going in a little bit above list price. So sometimes if you were to find a property and there's a little bit of negotiating room,
So
my advice is to negotiate off the seller credits rather than a lower sales price, because you could even use some funds from the seller to buy down the rate. But at least when I looked at it, it didn't seem that that would probably be, where you're at.
yeah,
But what is your feedback on that?
well, Trent and I talked about like what would he think, and there's a couple of things I'm asking him because they did some flipping to it, and it's not done yet, so there's still a few things like they should be done about a week. So I was like, there's a couple of things that I saw where I was like, well, can they do this and do that? And so I think waiting for some of that, but ideally, it's at 995. Trent, look, when he looked at the comps around that area, he was saying they're coming in at about 2% under asking. So that was like 975, 5 or somewhere around that. He was like, now given, the circumstances, considering it's the winter month, he's like, it could go either way. He's like, they may want it to be a little higher than that. So, maybe like 985. But the way that he's saying is that my initial offer, he recommended that it should come in a little under what they're asking for, under the 995.
Okay, so then here would be my thought is I would say I defer to Trent on whatever you want, but if I'm hearing you correctly, you were leaning around 975, is that right? Somewhere around there?
That would probably be an initial, yeah.
Okay, so here is my thought. Is if you make $1 million offer and you ask for 25,000 in seller credits rather than a price reduction, you will get, to me, another option to consider is what's called a rate buy down. Okay, and what I mean by that is 25,000 off the sales price is probably going to save you about $100 a month. Okay, but wait, hold on. Oh, I copied and pasted the wrong one, but it's fine. Shoot. Hold on, give me just 1 second. I think I copied. Yeah, I copied and pasted. All right. Well, I removed the Dunderin one. Okay. Okay. With 25K seller credit. Okay. you can then do what's called the 3-2-1 buy down with that amount, meaning that you can now buy that rate down to 3.49. So just another option to consider is, what is the best deal? Is it better to go straight up in a standard deal with 25K price reduction? You were already comfortable with the payment, so maybe you just go for the lower price. But I will tell you right now, a lot of people are worried about payment sometimes in rate. So look at this. I could get you a payment of 37.42, paying $1 million price, and you ask for, oh shoot, I thought I added it in. We add in a $25,000 seller credit. Oh, there we go. Okay, now I'll add it. It didn't. Okay. There we go. Yeah. Okay, so this shows you a standard deal at $1 million. Okay. This shows you a price reduction. So you do save, what is it, about $120, $130 or $150, or you could save $1,000 a month by taking the lower rate. Now, this is what's called a 3-2-1 buy down, meaning we lock you at 6.49, but your first 12 payments, you pay 3.49. Your next 12 payments, you pay 4.49. The next 12 payments, you pay 5.59. So 4 years from now, the rate kicks in at 6.49. Anytime in that 4 years, you can always refinance it into a 30-year fixed, and any of the funds of that 25,000 is left over just gets refunded back to you. So it's just another idea to consider, right? So it's totally up to you. I don't really care. If you're comfortable with the payment, you might want to just go vanilla, right? But if you're like, hey, like 3,700 feels a little more comfortable, I would say this is just another idea to consider. A $25,000 price reduction or $25,000 seller credit's the same to the seller. They don't care. They're still going to net 975 either way. But you can, in essence, roll in closing cost into the purchase price and use that money to buy down the rate. And that might be a better overall like strategy for payment wise. Does that make sense?
Yeah, I guess I'm looking at, so the cash to close, like that's the total amount of money that I would need to have on
That's
hand.
correct. This is all in at 466. That's down payment and closing costs, right? So I put the down payment at 450 in both options. Okay.
Mhm.
So there are some closing costs in there. But if you said, hey, Jackson, when I said 450, I really meant all in budget at 450. That's not a problem at all. I can just adjust this down to 450, and then we can do what's called a 450 budget rather than a 450 cash
Can
to
we look at
close.
that? Just curious,
Yeah.
just to get a
Yeah, absolutely.
idea.
Most people, that's what they mean, especially when they're selling a home, is they mean yeah, so, um,
Okay.
so all I'm doing there is now saying, okay, like, hey, we'll put a little less money down, and that way your down payment plus your closing costs plus the money to set up your escrow account all comes in at 450.
Yeah. Okay. And my payment's around 40 now.
Yeah,
Okay.
standard payments 48.49. If we do the price reduction, you get to 46.92. If you want to explore that temporary buy down program we were talking about, it's called the 3-2-1 buy down. Is what we call it. So I'll just relabel that. But yeah, give me some feedback. Do you like what
And I
you're
guess tell
seeing
me, I'm
so
trying,
far?
so that buy down, that's a new concept to me. So I guess what
Yeah,
is the overall benefit? Just I'm saving up front. Like
the
I'm not.
benefit is you're saving up front. Yeah, you're saving monthly payments. So it's a graduated payment program, right? This program has existed since the 70s. It's just more popular in years when rates are higher. So I have a lot of first-time home buyers, even second-time home buyers. They look at the payment and they're like, and
Mhm.
so, and to be able to get a 3.49 rate paid for by the seller, like you couldn't do this stuff in 2021. Like it wouldn't have happened
Right.
because in 2021, if the home was listed for $1 million, it would have gone for $1,050,000 because there would have been lots of
Right.
buyers. It would have gotten
Right.
bid up.
Right.
You're in a unique situation where you can actually get the home a little bit below list, which is
Right.
great, right? And so then the question is, what's the best use of that money? If you bought this home for 975, but it appraises for $1 million, on paper, you're $25,000 richer. But that's just ghost equity. You're not going to experience that wealth till you sell the home. But you could, instead of taking it as a price reduction, take that 25,000 and put it in your pocket right now. You could literally just they'll
Mhm.
give you $25,000. You can roll it in, and then you could then take that money and cover all your closing costs if you wanted, pay for repairs, pay for the pool, or you could use it to buy down the rate, which a lot of people are doing right now. Rate buy downs are happening on about 30% of loans right now. It's more common done right now just because rates are at about a 20-year high. So a lot of people are like very anxious about the rate.
Right. So then after 4 years, the rate would go up to the.
It's 6.49, right? So you have a 30-year fix. It will never go higher than the current market rate, but for the first 3 years,
Right.
you get like kind of a discount, right?
Now,
Paid
if
for by the
it
seller.
changes, if the, like you said, as the market is supposed to improve in terms of that, within that 4 years, I could also refinance and
Exactly,
get.
right? So I lock you in, your first 12 payments is 3.49. Then next is 4.49. You're probably not going to want to refinance this loan for at least 2 years because rates aren't expected to go back into the fours. But in year three, the rate would go to 5.49, right? So that means March of 2026, if rates are below 5.49, refinance into a new 30-year fixed, and you never see that 6.49 rate.
Right. God, yeah, because the rate of this house right now, we're at like 2.785.
Yeah. See, that's why this program's a little
And we refinanced.
yeah, people sometimes have a hard time. They're like, I don't want to give up my 2% rate. And I'm like, well, here's a unique strategy. Like you can kind of say, hey, I have a 3.49 rate. Because even though you're locked in at 6.49, the seller's paying 3% of your rate. It's factored into the deal. Like this 25,000 we're getting from the seller, it's put into an account in your name. So 3% of your mortgage payment for the first year is paid for by the seller. Then 2% of the next year, then 1% for the next year. That's why it's called 3-2-1. So it's just, I'd say I'll email all this to you. I'll put everything in writing. You can analyze it. I would say just write an offer either way. If you want to go in at 975, you can always go back and change during the option period. So you can kind of marinate on this idea a little bit, but I'd say if you like the house and the numbers kind of work for you, let's get the offer in. Let's plan for a February 8th close date. Let's plan to put 450 all in down payment and closing costs, and you're pre-approved, ready to go. So I think let's get the offer accepted, and then you can think about this a little more, talk with Trent, maybe do a little bit of research, and then because you're in a better position because you're comfortable with the payment either way, right, Ashley? You were like, if the payment's 4,800, I'm probably okay, right? I have some clients like I have one client, she's their first time homebuyers are like, hey Jackson, my payment can't be over 2,500. So I'm like, well, you have to get money from the seller. That's the only way the deal will work for you, So you have a few more options. And so is
Right.
that helpful?
Yeah.
Am I explaining that in a way that's helpful?
No, it is. And I was just running some numbers in my head right now, looking at like my monthly budget and like all of these various things. And what that's gonna be like, with the new kind of this new situation of like sharing expenses for children and all of that. And it's,
Yeah.
The numbers um that you're showing are still like it's still feasible without that. So it's still pretty comfortable without that. But I feel like if that's an option, it could be a benefit to it gets me. That's just more money I could be saving for 3 years or whatever. And I think, to be honest, I think obviously, and I don't know because I've never experienced this before, but I would think, my budget's gonna be a little tight in the beginning as I'm like adjusting to going from a dual income to single income. Yeah, so I'm thinking about that. So that could work. I think in either of those could work. And so if we went with the rate that you're talking about, then I would be making them an offer at.
Then I would make the offer at $1 million and ask for 25,000 in seller credits. That's how I would write the offer. And so when you look at a contract in the state of Texas, Trent will run point on this for you. But what you do is
Yeah.
on page 1, it lists the purchase price. So you could just put 975 here, or you
Got
could
it.
put $1 million here, and then you ask for $25,000 back in section 12. So instead of leaving this as 0, which is what most people do, put 25,000 here. So it's the same net effect either way, either 975 with 0 in this box or $1 million with 25 in this box. It's your money either way. It's just now, if it's listed in this box, I can use that money to buy down the rate for you.
Okay.
And so, okay, perfect. So then the last thing I was just going to kind of walk through real quick, and I'm going to email you a copy of all this. Okay. This is the website.
Perfect.
I'm going to print this to a PDF for you as well. We have this more info button. This gives you your payment breakdown. This gives
Okay.
your closing cost breakdown, right? Then if we hit this little fee detail, this gives your itemized breakdown of closing costs. Now, you already owned a home, so you're probably familiar with the escrow account, but just as a quick little reminder, you're going to buy new homeowners insurance. That's going to cost approximately $2,700. You're going to pay for that at closing. That's already factored into these numbers. That buys you homeowners insurance from this February to next February. Next February, you're going to have to renew that policy. Okay. So we're going to help you prepare for that in two ways. Number one, you're going to put $675 in the escrow account up front, and then you're going to contribute monthly. That way there's enough money to pay the renewal next February. The same concept applies with property taxes. You put $3,200 up front, you contribute monthly as a part of your payment. That way there's enough money for us to pay the tax bill for you out of your escrow account in December. Any questions there? Does that make sense?
Yeah, and all of that after this, that all goes into my monthly
Correct.
payment.
You just bring 450,000 at closing and you make
Yep.
your payment. In this scenario, 4,800, this scenario, 3,800, this scenario, 4,600, and it's already collected. So part of the payment we're collecting is setting aside and helping you plan for your property tax bill and your homeowner's insurance renewal. Does that make sense?
Yes, that makes sense. Yep.
Okay. Everything else listed here is a true closing cost, right? So we have about 2,000 in lender fees. That's for us to process and underwrite the loan. Then you have a credit report and a flood cert to make sure it's not in a flood zone. Then you have an appraisal to make sure the property's worth what you're buying it for. Then you have a couple title fees that generally runs about $1,500. It's going to go to the title company to manage the property or the transfer of the property and the paperwork and the money associated with that. Then we have a recording fee that goes to the county to show that you're the new homeowner. So if you add up all your closing costs plus your down payment plus your escrow account, that is how I got to the 450 budget I quoted you. Does that make sense? Do you have any questions on the closing costs?
No, that makes sense. Yep.
Okay. Are you comfortable with that number? Do you want me to go through any of that in more detail, or do you feel like that works for you?
No, that works for me. I think like if I'm bringing like I said, the around 450 total, that's what I'm looking at.
Perfect. Awesome.
So that works out. Yeah. This
I
is,
think we're in a good
yeah,
spot. I think you go write this
these numbers
offer.
are good.
I'll get the pre-approval letter and quote. I'm going to email you the numbers that we just went through. So you have all that in writing. I'm going to include a video on the no cost refinance and on that buy down program I talked about. So that way you have some information to kind of look at after we get off the meeting. I'll then send the pre-approval letter over to Trent, and then we'll just kind of see how it shakes out. But does that kind of get you what you needed for today? Do you have any other questions, Ashley? Anything else I can help out with?
No, I think that's good. And I think I lean towards that buyback just because I mean it doesn't, yeah, if I'm still putting the same amount down and I'm paying less, that's money I'm thinking too. I mean, I have money set aside for a pool, but depending on what this estimate is, it may not be enough to cover it all right up. So that could also help towards just making a monthly payments
That's kind
to
of the
get that paid
concept
off
too
sooner.
on why it's
Yeah,
helpful, because usually you incur most of your expenses on a house in the first year or two. Moving expenses,
right.
pool expenses,
Exactly.
furniture. You might want to redecorate. Once you kind of get settled, like you start to kind of get
Yeah,
into
that
more of a
makes
rhythm. But
sense.
that first year or two to get a
Yeah.
little bit of a break paid for by the seller, it's a unique time in the market where you can get that. Like we were not selling this program at all in 2020 or 2021,
Yeah.
but
This
it's become
is
a little more popular in
yeah.
the last year or so.
Sounds good. Oh, it sounds good.
Um,
Yeah, thank you. This is
awesome.
great. I appreciate how
Yeah.
fast you've moved. Like this, Trent was like, I have the perfect person for you. This has been great. So I really appreciate it.
That's awesome.
Yeah,
That's so great. Well, I really appreciate that. If this has been helpful to you, if you can do me a little favor, text Trent and just say, hey, Jackson's done a great job. If you text me that back, don't tell him I told you that.
absolutely.
I'll give you a $50 credit, because for me, my business is built on the realtor feeling comfortable referring me. So that's part of the reason I give them
Yeah.
guarantees. I'll take care of you whether you go with me or not. But whenever they get positive feedback, it's like, oh, I do like Jackson, because there
Yeah.
are other loan
I'll
officers out
definitely
there.
text him right now. I'll
But
text him
me
right
and
now.
Trent have done a lot of deals together. And what I would tell you is he's excellent. He's super
Oh yeah.
knowledgeable. He's been in the business a
He's been
long
great.
time. Like you've worked with him before. You already know this, right? But
Yep.
just as a reminder, I
Yep.
see a lot of realtors. Trent knows what he's doing. He's going to give you
He
really good
does.
advice versus like kind of making an
Yep.
opinion, which some realtors do because they just don't
Yeah.
know better. But Trent does
Right.
know the stuff. That's why, I'm very honored that he connected us. So,
Yeah. I'm
um,
gonna send him a text right now. Yep.
awesome. I love it. Yeah, text me that back and then I'll give you the credit. So I'll make a note of that right now. And
Okay.
then I'm also going to make a note about the divorce right now. So again, we're going to close the loan with you being married, okay? And because we're not expecting the divorce decree to be finalized. If it does get finalized, let me know. But right now, we're going to close it with you being married and then put title just in your name. So I'm going to make notes of that divorce decree that way. But everything else in the loan was a little more straightforward. And then you're going to be traveling. I'll make a note of that as well. Okay. Fantastic. Well, Ashley, enjoy the rest of the afternoon. It was so nice meeting you. Okay.
You too. Thank you so much.
Thanks. Bye bye.
Bye bye.